What's going on, you guys? It's Professor again, back at you. Today we're going to talk about the beginning. Basically, what is Forex? Okay, what is Forex? Well, foreign exchange market is what it stands for. Foreign exchange market. If you ever traveled anywhere outside the country, you have participated in the foreign exchange market. You are participating in Forex. For example, you go to Mexico, you take your dollar, $20, $10, whatever it is, to Mexico, and as soon as you get there, you have to convert it, right? You have to go and get pesos, okay? That process of conversion is the foreign exchange market, hence foreign exchange market. So we're exchanging our dollar for their US pesos. Now, when you do that, there's a difference in the price, okay? 10 to 1, 11 to 1, whatever it may be. That difference is what we are buying as Forex retail traders in the form of a pip, okay? So if you look at a dollar, you have $1.28. We're going to go 4 place values deep, okay? And that's what we're actually purchasing in the Forex market called the pip, all right? A little bit more than you need to know. Basically, this market dwarfs the New York Stock Exchange. I mean, literally just kills it, okay? You're talking anywhere from almost $6 to $7 trillion that this market will do per day, versus a couple billion that the U.S. Stock Exchange will do per day. One of the big things that I like about the Forex market, and the difference between the Forex market and a commodities market, stock market, is I don't have as much information to kind of weave through. In the stock market, there's tons of companies, Fortune 500 companies, small companies, big companies, startup companies, all kinds of ways to get caught up in the weeds in the stock market. A lot of things that can affect the price also in the stock market. Whereas currency, you can kind of narrow that down. There's 8 major pairs, currency pairs, and then you have some minor pairs, and then you have what we call exotic pairs. And we'll get into what a pair is too a little bit later on. Okay, but it's a lot less traffic, a lot less noise to actually deal with in the Forex market than it would be to do the stock exchange. So that's one really big thing. It's a very high risk market, so you have a chance to really lose a lot of money, but at the same time, with that risk, you also have the reward is also there too, to make a lot of money in a short period of time. Again, we're talking trillions of dollars. If we can just get in and grab some of that, we're good to go. Okay, so the way that these things are set up is they do what they call pairs. Okay, they combine 2 countries together, 2 countries' currencies together, and they sell them against each other. For example, you'll have the euro and the USD will be a currency pair. Okay, hence the euro USD. All right. The euro is the pair that's listed first, so that's going to be your dominant, your major, okay, in that particular pair. I'll bring out my trusty whiteboard because I like to see things. Euro versus the USD. Okay, so we have this kind of thing right here going on right now. All right, the euro versus the USD. The euro is going to be considered your major pair because it's coming first in this particular order, whereas the USD is coming second. Okay, you also have what we call bulls and bears. All right, you've probably heard this term if you've ever watched a video or heard anything dealing with stocks. Okay, so the way I like to remember the bulls and the bears is the bulls, they have horns. Okay, so that to me symbolizes going up. All right, so the bull, when you have a bullish market or the bulls are in control of the market, that means they're trying to push price and value high, which are 2 different things, but we'll just talk about price right now. They're trying to push the price up high when you're talking about bulls. Now, bears, to me, in my mind, I think about slumbering, okay, going to sleep, hibernating, going down. So I'm saying versus bears, they're going to go down. All right, make sure that's clear. We got to understand a bullish market versus a bearish market. Okay, we're going to take these terms in time with this euro USD. Okay, so again, we have our bulls versus our bears, and they're always fighting, you guys. The bulls and the bears are always trying to get into it to control where price is in a particular market on a pair, on a currency pair. So again, back to the currency. We have the euro and we have the USD. Okay. Now they're going to say, well, the euro is the major pair, so it's going first. Okay, and the euro might be priced at, we'll say, $1.29. So the euro value is $1.29. Okay, right now. All right. Whereas the dollar could be valued at $1.24. Okay, so it's a little bit cheaper than the actual euro. Okay, with this, say everybody seems to want to buy the euro. Okay, so the price of the euro would actually start to increase. All right, as it works its way up through the chart. Okay, the reason why this would happen is because they are buying the euro. They are buying the first particular pair. They are bullish on the euro. Okay, now say things start to turn around and this price starts to fall down. Okay, they are no longer buying the euro when the bulls are no longer in control, when the price is no longer going up and price starts to roll over. You now go from the market being bullish to bearish, and from them being buying the euro dollar, they are now selling the euro dollar, or in reverse, buying the US dollar. Blows my mind when I first thought about it. Okay, so just bear with me. Try to think about this again. When the bulls are in control and the price is going up, okay, when we have price rising, all right, these are going to be our bulls. I'm going to try to write left-handed, okay? These are going to be our bulls, all right? They're pushing price higher, okay? All of a sudden, we get to a price where it's not that attractive. Okay, they start to fight. The bulls and the bears start to fight. The bears come in and say, well, we don't really want to continue to pay that for this particular pair. We're going to bring the price back down. All right, so you go from buying the euro to selling the euro or buying the dollar. Let's do it one more time. Bulls going up. You are buying the euro. When you're buying the euro, you're selling the dollar. Bears, price is going down. You're bearish. You're selling the euro and you are buying the dollar. In this particular example, going down. This might take a little bit of time for you to get into your brain. Okay, you can think about it only as one particular currency if that helps you, but I want you to understand what's actually happening. Okay, you are buying and selling consistently, and that's the beauty of this market, is that we can make money on both sides. We can make money while the price goes up. We can also make money while the price goes down. Now, this is what I'm going to help you guys try to understand, and we're going to work with and through together as we go through this journey, is really understanding how this stuff works. This is just one piece of it, okay? Understanding a pair, all right? Then we'll get into actual direction, trend lines, support and resistance, things of that nature. But right now, we just need to understand how this market works, all right? So this is what we're actually buying. We're buying the euro dollar versus the US dollar. If we're buying the euro dollar, inversely, we're selling the US dollar, and vice versa. If we were to sell the euro, we would be buying the dollar. Okay? This price that we see at the top changes constantly. Every second, it's moving up and down. We're talking the fourth decimal is what we're purchasing. Okay, so this price is just jiggling up and down all day long throughout your chart. We're going to go to the charts here in a second and kind of really see what's happening. All right, so again, just to recap, we're talking about $1 trillion, multi-trillion dollar, at least $4 trillion a day industry. Okay, versus about roughly 74, $80 billion in the New York Stock Exchange on a daily basis. Okay, so it's definitely a lot larger of a market. Okay, you're always buying and selling at the same particular time. Okay, and it's tied to a currency pair. All right, so from the Euro USD, any of the 8 majors, the Great Britain GBP USD. Okay, you'll have the AUD USD, and I'll write them down for you. Hopefully, you guys are out there taking notes. Let's go ahead and get these things jotted down. So again, we'll start with the Euro the Euro USD, the USD slash JPY, which is the Japanese yen. You will have the GBP slash USD, which is the Great Britain pound in US dollar. You will have the AUD slash USD, which is the Australian dollar versus the US dollar. You will have, let's see, on the major, we will also have the NZD slash USD. Okay. We also have our CAD, USD slash CAD. We can go Euro Pound, GBP, and what else do we have here? They give us a couple more. We'll throw in here the Chief, USD CHF, and you'll learn all these things like night and day. Okay, so I'm going to recap them for you again. All right. First pair we'll look at is going to be the Euro USD. Okay, again, you're talking about the Euro dollar versus the US dollar. Okay, then we'll have the USD, US dollar versus the Japanese yen. Japanese yen is kind of a crazy pair. This pair right here is really volatile. It moves a lot. Okay, we'll talk about that too. GBP, the Great Britain pound, also known the cable. Okay, versus the US dollar. All right. With Brexit, we had a lot of moves on the pound. Okay, and the euro. They kind of go together. The Australian dollar, AUD, USD, okay, the Aussie, all right? The Aussie is a nice pair too as well. It's been on a nice little rip to the upside right now. A very liquid pair right there, okay? So there's a lot of opportunities to make some money. The New Zealand NZD USD, the Kiwi, okay? It's been very, very bullish. Learn your terminology. Bullish, that means we're going up, okay? This past week, week or 2 weeks actually, we've had 3 weeks of consistent growth on the Kiwi, so it's really just rocketing. USD CAD, the CAD, okay? So you have the US dollar versus the Canadian dollar, okay? Pay attention to oil. Oil prices definitely affect the Canadian dollar, okay? Then we'll get into the Euro GBP, okay? You got two European currencies right here, the Euro and the pound, all right? The fact that they move together, this makes this a nice little pair to kind of watch, okay? It's an indicator for other pairs. The USD CHF, which is the chief, the big chief, okay? France, all right? So we got some nice stuff right here. The French election made that move nicely, okay? So what really moves this market is the investment bankers and fundamental news, okay? So we got to really pay attention to those things. That's one of the difference between this market and the stock market, is the fact that one, we don't have as much stuff, but we do have things that will move it, okay? And I like that about the Forex market. You don't have a lot of things that can, you know, you don't have to worry about a CEO waking up one day and got a sexual harassment charge and all of a sudden the stocks crashed, okay? The things that we got to worry about are elections, interest rate, things that are on its calendar, okay, that we can see and that we can plan and trade around. So there's not even a lot of surprises when it comes to the Forex market. But these are kind of your major pairs that you want to deal with. We get into some other exotics, you know, we talk about Korean and Singapore, things of that nature. You can literally trade any country on this particular Forex market. So these are the ones that we'll really focus on. Out of these 8, we're going to suggest that you guys really focus on about 3, and I'm actually going to zone you in to just one particular pair that I want you to focus on to begin with. We're not going to get all crazy, and once we learn that particular pair and how it moves, we're going to take everything we learned from that one particular pair. How do we read it? How do we understand the fundamentals about it? How do we chart it up? And we're then going to apply it to, you know, one other pair, add 2 other pairs, add 3 other pairs to your portfolio and really start to build that up. But right now, don't overwhelm yourself or confuse yourself. Let's just focus on one particular pair and kind of go from there. Okay. So again, the Forex market, just kind of a recap. You know, you're talking $1 trillion a day, multi-trillion-dollar a day industry versus the stock market, which is in the billions. This is the bloodline of countries. We're following their economics. I geek out on some of this shit. Their economics, their political and social standings in the world. It really shows you how we're all connected. That's the beauty of this market. It's different from the stock market. We don't have to worry about as much news and as much kind of, you know, small moving pieces that can affect our trades as much. We can trade our news off of a calendar instead of waking up just finding out something crazy has happened. So first video, Forex 101, I didn't want to overwhelm you too much. I just want you to kind of see how it's compared to the stock market, how we're actually in this currency exchange every time we travel, okay? What a pair would actually look like, and some majors and minors, and then that's pretty much it for this video, okay? When we come back for the second part of this video, we'll talk about pips a little bit more, and actually get into candlesticks and how they're formed and what they're used for in your charting before we get into charting and going around that nature. So right now, you know, till the next video, just process this, play it back again, write down some notes, okay? I'm taking all the hard work out of it, you guys. I'm giving you, you know, getting you straight to the point, okay? I've done all the research for you, so all you got to do is copy my notes, take down good notes from what I'm telling you, and I'll avoid you a lot of headache and trouble that you're going to run through if you do it on your own and try to go out there and weed through this stuff yourself. So trust me, you know, pip it ain't easy, but somebody's got to do it, and let's go ahead and get it done. Till next time.